Welcome! In this video, ZBCN coin made a bullish pattern. When is the attack? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
When taking a general look at the chart, it is evident that a clear downward trend has been dominating the price for a long time, and this trend can technically be represented by a descending trend line. This trend line has been tested by the price multiple times. Each time it acted as strong resistance, confirming the dominance of sellers in the market. However, this situation seems to have recently changed due to a significant development. This descending trend line has finally been broken, initiating a major shift in market dynamics. Descending trends symbolize the pressure of supply over demand in the market. In other words, each attempt to rise is pushed down by sellers, and each new peak remains lower than the previous one. This structure creates a negative sentiment in the market and generates uncertainty and caution among investors. However, when this downward pressure line, the trend line, is broken, it's not just a technical level that is breached, but also a turning point where investor perception is shifted. For this reason, an upward break of a descending trend line is not just a graphical breakout, but a very strong reversal signal that can initiate a change in market direction. In the currently analyzed chart, such a formation has occurred, and the market appears to have broken free from the downtrend. The price has successfully moved above this descending trend line, which it had long been trading below, and with this breakout, buyers have regained control of the market. The price movements following the breakout also confirm its validity. After establishing itself above the breakout zone, the price gained upward momentum and began to rise freely, as if unchained. Such breakouts are considered highly significant in technical analysis because the price had previously bounced off this line many times. Each time, the weakness of buyers allowed sellers to push the market lower. But this time, things played out differently. Buyers responded with more determination and strength, managing to push the price above this resistance line. This shows us that the balance of power within the market has shifted and buyers have taken control again. With the break of the descending trend, the start of a new bullish wave is a natural development. Once this line is broken, the level that previously acted as resistance now becomes support. This technical transformation builds investor confidence and leads to increased buying activity. Especially if the breakout is accompanied by strong volume, it indicates that the buying is not speculative but structural and sustainable. In other words, the broken descending trend line represents a key structural breakout, signaling a directional shift in the market. Such breakouts also act as triggers for algorithmic trading systems. Many automated trading algorithms initiate long positions at levels where descending trends are broken, which increases volume and accelerates the price rise. Furthermore, candlestick closes just above the trend line and sustained movement above this level are among the technical confirmations of the beginning of a new uptrend. As market participants recognize the breakout, previously cautious investors also begin to take positions, creating new buying pressure on the price. Especially those who were previously short and profitable under the descending trend line may begin to close their positions to minimize loss, and these closures also contribute to buying activity. In short, the breaking of a trend line is not just an upward price movement, it's a domino effect that leads to a complete shift in market behavior. From this point on, technical analysts typically consider Fibonacci extension levels, past horizontal resistance zones, and volume profiles to determine new target levels. Because the broken descending trend now allows for price movements to develop within a new upward channel. Within this new structure, the price aims for previous high points, and breaking those levels can result in the formation of new higher highs. In conclusion, with the upward break of the descending trend line, the character of the market has completely changed. This breakout is not only a technical level being surpassed, but also a positive evolution of investor sentiment. The pressure created by the downtrend on price movement has now disappeared, replaced by more optimistic, aggressive, and positive buying behavior. Within this new structure, the likelihood of a developing uptrend is quite high, but we can't rely solely on trend lines for analysis. Let's take a look at other metrics as well. Stay tuned.
When examining the chart, it is evident that the current structure carries the characteristics of a flag pattern, which is widely recognized in technical analysis literature as a strong continuation formation.
These types of patterns typically form during short-term consolidation phases following sharp and high-volume price increases. After a strong upward surge, the price moves sideways or slightly downward within a defined channel for a period. This period of sideways or mild correction represents a temporary balance between buying and selling in the market, but it does not signal a trend reversal. In other words, the market is taking a brief pause in its upward movement without changing direction. The flag pattern, as its name suggests, visually resembles a flag. It is preceded by a strong upward move known as the flagpole, followed immediately by the formation of a horizontal or slightly downward sloping channel. This channel is typically defined by two parallel lines. The most critical part of the formation is when the price reaches the upper boundary of this horizontal channel, the upper flat line, and breaks above it. At that point, what is commonly referred to in technical analysis as the confirmation of the pattern occurs, and the price is expected to regain momentum and initiate another upward move. In the current chart being analyzed, it is clear that the price is moving within such a flag structure. After the previous upward movement was completed, the price consolidated within a range without breaking its upward trend, forming a flag pattern in the process. This formation may have occurred due to profit-taking by investors after the rally, short-term selling pressure, or the market gathering strength for its next move. However, it's important to note that such sideways compressions typically signal a continuation of the existing trend rather than a reversal. One of the strongest aspects of flag patterns is that they signal a high probability of the prior uptrend continuing. For the pattern to be considered complete and confirmed, the price must break above the upper horizontal boundary, show an increase in volume with the breakout, and ideally close above that level. When this occurs, the flag pattern is considered triggered from a technical standpoint, and investors begin to anticipate a new wave of upward movement. Therefore, the current price area is critical. If the price manages to break above the upper boundary of the channel, it could signal not only a short-term rally, but also the extension of the broader trend. A breakout above this upper boundary represents a key signal many investors wait for before entering long positions. Professional investors and algorithmic trading systems in particular often become active at these breakout levels. As a result, such breakouts can lead to significant increases in trading volume. Additionally, investors who missed the initial move may look to enter after the breakout, potentially leading to another wave of buying pressure and allowing the price to expand upward rapidly. In technical analysis, the price target for a flag pattern is typically calculated by taking the height of the flagpole, the initial vertical move, and projecting it upward from the breakout point. This means that not only does a flag pattern imply a breakout, but it also carries a significant upside potential afterward. This makes the pattern especially attractive to investors. At this stage, there are several technical details to pay attention to once a flag pattern breaks to the upside. First, it's important to examine whether the breakout is supported by volume. A breakout without volume may be viewed with caution by investors and increases the risk of the pattern failing. However, a breakout supported by strong volume typically increases the validity of the pattern and the likelihood that the price will reach its projected target. Furthermore, even though a sharp upward move is expected after the breakout, in some cases, the price may return to retest the breakout level. This is known as a retest in technical analysis. If the price holds at the breakout line during the retest and then resumes its upward movement, this confirms the strength of the pattern. In many cases, this retest zone provides a second entry opportunity for investors. In summary, the current technical structure shows that the price is consolidating within a flag pattern that formed after a strong upward move. The most critical area of this formation is the upper horizontal boundary, the top line of the pattern. If this line is broken to the upside, technical analysis suggests that the price will likely begin a new upward wave. This breakout would boost investor confidence in the uptrend, increase trading volume, and initiate a move towards the pattern's projected target level. Therefore, how the price reacts to this upper line in the coming days will be highly decisive.
When examining the technical indicators on the chart, it is particularly noticeable that the Bollinger Bands have contracted significantly. Such band contractions often signal an upcoming strong price movement in the market. This is because Bollinger Bands are highly dynamic indicators designed to measure market volatility and reflect it on price action. By nature, the closer the bands move toward each other, the more likely it is that the price is preparing for a large and rapid move. The contraction of Bollinger Bands is frequently referred to in technical analysis as the spring-loading effect. Imagine a spring. The more it is compressed, the stronger and longer the jump when released. The same principle applies to Bollinger Band contractions. When prices remain compressed within a narrow range for an extended period, it often reflects investor indecision, repositioning of trades, or a temporary balance in the market before a new trend begins. However, this indecision doesn't last long. Sooner or later, the price breaks out of this narrow channel and starts a strong movement. The basic structure of Bollinger Bands consists of a 20-period moving average with upper and lower bands formed by standard deviations. When the distance between the bands widens, it indicates increasing market volatility. Conversely, when the bands narrow, it suggests that volatility has decreased significantly. This decrease usually occurs because the price has been moving calmly for some time. However, these calm periods are not permanent, and the price often breaks this silence with a powerful breakout. At this point, a Bollinger Band contraction serves as an important early signal for investors. A similar scenario is currently observed in the technical outlook. The bands are moving extremely close to one another, a level of compression not seen in a long time, and the price is moving almost glued to the middle band. This type of setup is typically seen before a volatility explosion. As price action tightens, energy builds up within the market, and eventually that energy is released forcefully in a particular direction. In other words, the price now appears to be in the calm before the storm. Though it looks quiet, this structure may actually indicate that a powerful breakout is imminent. During such periods, the price often first moves outside the bands, and this breakout either becomes sustained or turns out to be a temporary trap. However, breakouts supported by volume data, whether to the upside or downside, often lay the groundwork for significant trend beginnings. Therefore, the current Bollinger Band contraction is a development investors should closely monitor. This narrowing could indicate that the current trend is ending or that a new one is about to begin. If a breakout occurs in the Bollinger Bands, the price will accelerate.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.